Hi everyone, welcome back to the next session, which is on economic recovery. And with me today, I've got Ian Purdy, who's Head of Property and Infrastructure Investment at ACC and is one of our Infrastructure New Zealand board members. He's also joined by Boyd Warren, Pam Ford and Nigel Tutt. So to introduce Ian, who's going to facilitate this session, Ian is the Head of Direct Property and Infrastructure Investment for ACC. He has been responsible for ACC's property and infrastructure investment for over a decade, which has grown from 50 million to over 1.2 billion during this time. He has negotiated and structured the purchase of approximately $1.2 billion of assets for ACC, employing a number of different transaction structures across a wide range of property and infrastructure assets in both the public and private markets. Ian has led ACC's PPP team through 3 successful PPP bids, and Ian has also structured a number of innovative transactions in the property space. Prior to working at ACC, Ian worked in an equity research team at UBS, where he focused on researching companies listed on the New Zealand share market in the transport, infrastructure and property sectors. So I'll hand over to you, Ian.
Great, thanks so much, Claire. Hey, welcome everybody to today's panel session. I really encourage you to make use of the Q&A function that you'll find on the panel and direct any questions to the speakers that you have today. And also make use of the discussion forum that's below as well. Any updates that you want to post to the event stream would also be welcome. Today I have with me 3 wonderful panelists. Boyd Warren is the General Manager of Innovation and Business Growth for ChristchurchNZ. Boyd is the General Manager, he leads the Economic Development team there, where they're striving to increase the resilience and competitive of local businesses, retaining and growing high-value jobs in Otatahi, Christchurch. Boyd brings considerable previous business and commercial experience, including owning and operating businesses in e-commerce, communications technology, retail, and adventure tourism. Also with me today, Pam Ford, Director, Investment and Industry, Auckland Unlimited. This is the region's cultural and economic development agency. This includes industry transformation, skills, workforce, attraction of business, investment, visitors, screen, and talent. Pam's worked in economic development and international trade and investment since 2001 at central and local government roles. And prior to this, she worked in as an international marketing professional in private and the not-for-profit sector. Third member of our panel today is Nigel Tutt, Chief Executive Priority 1, the Economic Development Agency for Tauranga and the Western Bay of Plenty, which was established by the local business community. He has strong private sector background, including previous roles in commercial management, media, product development, data strategy, digital marketing, and supply chain and logistics. Nigel takes a strategic approach to encouraging investment and the attraction of new business, as well as supporting the growth of design-led innovation. Welcome to my fellow panel members. Pam, perhaps you could kick us off today with a quick introduction for those members of our audience who are unfamiliar with economic development agencies. What does an EDA do?
Thanks, Nigel, and kia ora koutou. An economic development agency of today is all about playing its part in building a prosperous, inclusive, zero carbon and resilient local economy. So what does that mean? I see our role as a connector. We connect private sector and government, tertiary and business and community. And we play a neutral role and have a neutral voice. Although where needed, we activate and support our community, and whether that's business or tertiary, and working with government. So in addition to being a connector, we're a delivery agency as well. We get things done, always in partnership. And in Auckland, at Auckland Unlimited, that means attracting investment, as we've said. Right now, we're looking at what is the master plan for Southern Auckland around the Drury area? What kind of investment in sectors should we be targeting that will create jobs for the people that are going to live in that area? Keeping in mind that we're creating a town the size of Napier into that area over the next number of years. So we focus on sectors and places. We create innovation precincts in our region. In Auckland's case, we operate some film studios. And really important as we go into the next few years is how we drive our climate action plan, including and helping businesses in the community in that area. So we have a regional mandate, as all do, all slightly different. Nigel's is a slightly different setup. We're a council-controlled organisation, but not all of them are. And we really have a future-focused approach to grow our region and make it a better place for our residents and visitors.
Great, thanks so much, Pam. Nigel, Priority 1 is slightly different from other EDAs. Can you tell us a bit about your organisation and how it differs?
Oh, thanks, Ian. Kia ora koutou. Yeah, we're a bit different at Priority 1. We're an incorporated society. We're not a council-controlled organisation or a department of the council like many others are. So what happened was we were formed in the early 2000s by members of the business community who got a little impatient with the lack of growth in the area and decided to set something up. And that was separate from the council in those days, but now we kind of work in partnership with them all the time. The model's an incorporated society. We have about 350 business members, and that's most of the big businesses in this area. What that allows is that we're independent and fiercely apolitical, so we can just set a strategy and go. We don't need to worry about the politicians of the day. We're not subject to the same perhaps obligations that councils are, so we can operate with a little bit of flexibility around that and almost like a business. And I guess the main thing is we operate in partnership with local businesses, so they have a bit of a say in the regional economic strategy, and that helps our overall buy-in and kind of team approach, which for this area is all about. We're a high growth area, but we've got to do better in terms of building prosperity for our people. So that's what we're squarely focused on. Thanks.
Okay, great. Thanks, Nigel. Boyd, I wanted to ask you, the Canterbury economy looks pretty good. Commodity prices are strong, business confidence has bounced back, consents are up strongly. In fact, even tourism expenditure is strong over winter. It was stronger than 2018. Looking at the key indicators outlined in the Otatahi Christchurch recovery plan, you're pretty much there already, almost. How has COVID impacted Canterbury, and is there pain still being felt?
Yeah, kia ora koutou. Some good indicators there, and we do have a very strong primary and manufactured export base. Added value farm products, but also machinery, electronics manufacturing exports have been strong down here. And I guess the tourism stats look comparatively good because our base was lower. I mean, we're a gateway to the rest of the South Island traditionally, and we've also had some adversity where we've been off the consideration list in the past decade for visitors. So, I guess the comparatively good tourism numbers are off a lower base than my counterpart regions there. But look, whilst the diverse Canterbury economy has performed through COVID and been really resilient, we have got issues with productivity like other regions. We've got a really strong base of Crown Research Institutes, tertiaries, and people that are innovative, but we haven't been very good at commercialising that innovation down here. In fact, we've lagged well behind the rest of New Zealand in commercialising innovation basically and creating highly productive growth businesses. We've got challenges. The percentage of people employed in knowledge-intensive industries hasn't been growing. And of course, we all know that that's a pathway to high productivity and a sustainable future. So whilst the performance looks good on paper, there's plenty of work to do.
Thank you. So Pam, the impact on Auckland's obviously more apparent. What areas are most in need of support and what can be done?
Thanks, Ian. Yes, the current lockdown is having a huge impact on Auckland, and That's because we've had 5 lockdowns, so a cumulative effect. I think we're on to day 90 or around about right now of this current one, but we've had over 180 days in lockdown. So that's really impacted, particularly hospitality, retail, travel, and there'll be a long tail of those sectors. Places where it's really hit hard is the city centre, and that's important because the city centre is Auckland's GDP. And if you extrapolate that out, it's 8% of New Zealand's GDP. And so we look at things like pedestrian count, which has been near zero for most of the last 3 months, gone up slightly in the last week. In 2019, on average day, you'd have about 23,000 people in the city centre. So that area has lost $1 billion in customer spend over the last year, which is about the same amount that's been paid out in resurgence payments across the country. And once we go to red, people are still encouraged to work from home. So we can't really see city centre coming back, strongly until, late January, February, hopefully earlier, but we'll see. And then the other area is South and West Auckland, particularly South Auckland, a lot of industry around the area. This is concentration. It's 11% of New Zealand's population, high percentage of peoples, and many of those people affected as being frontline workers. If in construction, for example, 75% of Pacifica businesses are in construction and largely sole traders or a few people. If they have been a close contact or had COVID, which has been quite prevalent in that part of Auckland, those people have to stand down for 14 days. They're losing their business, or will be in 2022 when they can't catch up on payments to IRD and the like. So that impacts, further up the line across the chain. So there's really are significant impacts in Auckland, and a lot of the work at the moment is working with government around what can be done to accelerate some sort of recovery. And of course, construction for right across the country is the supply chain, the cost of materials. We're building, and I've just come off the steering group meeting where the escalation costs are very real. I didn't know that I'd be so involved in the cost of steel, but it's a real issue. It's for us in Auckland to be concerned about right now.
Thank you, Pam. It certainly are lots of challenges. Nigel, I note your most recent economic updates says the economy is in a good position, but $35 million was lost from the local economy over lockdown. What are your members are saying is needed to respond to this?
Thanks. So firstly, we're actually in a reasonable spot. 35 million is not much in the context of an economy, and most of that we're actually ahead year on year anyway. So that's not a major. We certainly sympathise with those other regions that haven't quite been as fortunate as us. Like a lot of it's just down to what the cards throw you. So it's kind of heartbreaking to see what's happening there in Auckland, Pam. So we do sympathise with you and the businesses around you. So generally our economy is doing reasonably well, and most of that is because we're relatively diversified and we've got some really good economic assets in the terms of Port of Tauranga and a kiwi fruit industry that's kind of rampant at the moment and can sell as much as it can possibly grow. So look, we're lucky that we've been able to be in this position, and very much businesses are thinking about, well, how do I expand and take the market opportunities that are out there. The challenge with that is we're kind of behind on infrastructure because of how quickly we've grown. So we'll have to work really, really hard in terms of being able to have the region respond to the needs of those industries that can crack ahead with it from here.
Thanks for that. Boyd, you've had to cancel the Moon Festival and Sail GP down there, is that right?
Yeah, that's right. So we certainly haven't been immune to the impacts of COVID, and te tautoko to you, Pam, and everyone in Auckland, doing it tough. We see what's happening to our event sector as well. And look, I just wanted to qualify something I said earlier. look, the diverse economy has performed pretty well at a macro level, but there's incredible pockets of pain in the hospitality sector. We've got a significant number of new job seekers. It has been trending down in recent months, but there's nonetheless still 4,000 or 5,000 more job seekers now than there was pre-COVID. And so there is, it's very two-sided, like the skills market that we're going to talk about soon. The economy's a little bit two-sided as well. It looks good at a macro level, but there's definitely pockets of pain, including the event sector and hospitality. But our infrastructure is actually in a reasonably good spot. We've got new libraries, a new convention centre about to be completed. We've got a new stadium being built. We've got pretty good vertical infrastructure, frankly, and also new roading network as well. We're in pretty good shape. Like everywhere in New Zealand, we could do with some help with our drinking water infrastructure, and rural broadband. We could do with that, but we all share the same issue. If we don't have good infrastructure, we can't attract and retain the right people and the right businesses. So, we're all in the same boat. But I feel like Christchurch City is in reasonably good shape comparatively.
And it's a good point, isn't it? One of the questions that we've got from online, from those watching, is that Auckland is a big part of the nation's GDP, and what can central government do to continue to strengthen the region so that if we have events like this where we're heavily reliant on Auckland, and for instance maybe building supplies out of South Auckland, that are potentially some of those are New Zealand's only source of those building materials. What can the government do to kind of strengthen the regions? I'm going to throw that over to you, Boyd.
Yeah, well, I sort of wear two hats here. My Christchurch City hat, but then representing all of Canterbury. Obviously a really clear pathway to safe release from lockdowns. I think some that businesses can plan around would be really useful. The supply chain issues that Pam alluded to before through Screen Project and the skill shortage are the two key inflationary pressures on business. No one's talking about interest rates or debt levels. They're talking about, the inflationary pressure of, goods and services to run their businesses, basically. So, look, any interventions that the government can make to, address those two issues, would be absolutely welcomed right across the country.
And Nigel, did you have any thoughts on that?
Yeah, I would certainly agree with that. If you look at, Auckland is a massive economy. I think that's probably 10 times the size of our population. So it makes a big difference when all of Auckland is locked down and unable to come to the Mount to enjoy an ice cream or something like that. So it has massive kind of follow-on effects to other areas. But I kind of agree with Boyd. The big issue, you can solve some things in the longer term, but the main one that will get in everyone's way is that skills shortage, and it's going to be a big barrier to businesses. And I guess you got that compounded on the effects of lockdown in Auckland, and people want to kind of move out and things like that, maybe go to other places. It's going to be a tough little time ahead of us, I think, from a talent point of view.
It's a challenge, isn't it? Because reportedly there's a million New Zealanders living overseas. If they all decide to come back, we have a housing short. We get a big surplus of skills, but we get a big shortage of housing. Pam, is that Auckland housing crisis getting any better, or is it getting worse?
Well, the pandemic stopped the flow of migration, hasn't it? So that's dropped away, but the housing crisis remains. There've been a lot of progress in terms of the unitary plan we put through in 2013, which allows more density. There is residential building all over Auckland at the moment, right around me, all sorts of properties that were, nice big size, Tauranga and Christchurch size properties are being turned into 2-3 story apartment blocks. So there's a lot of work to be done there. Just one point too about the regions talking about having Aucklanders back. In actual fact, Auckland wants the regions to return to Auckland because our domestic economy, or our Auckland economy, relies on everybody coming to Auckland as well. So no one's really talking about that, but we really can't wait to open up so that all of those that are around the country can come back to Auckland because we need you as well. So the one, I don't think 1 million New Zealanders are going to come back anytime soon, Ian. We saw a number come back, early last pandemic was hitting other parts of the country. Quite a few of those have gone back. And I think the immigration reset will really dictate how much longer that housing crisis is a massive issue. And I think the price of housing is the key one now, as much as the supply.
Yeah. Agree with that. And I think it looks like consent issuance right across the whole country is at record levels, which is really, really heartening. And, I note that there's a lot more multi-unit dwellings being consented down here than there ever has been before. So, yeah, but it's a conundrum because we can't house the people that we want at the moment, very well. So at key point, you've got to have the infrastructure first, don't you?
Well, that's right. I mean, I have spoken to employers who even pre-COVID, were kind of struggling to get people to move to New Zealand because they couldn't secure appropriate housing for them.
Although
and not just in Auckland,
Christchurch is probably in a little bit better situation than the other regions in terms of stock and availability, but nonetheless, we've got the same inflationary pressure and temporarily finite supply at the moment too.
So Pam, the Auckland Recovery Plan talks about recalibrating industry capability and infrastructure together to support the needs of Aucklanders. Can you talk a little bit more about what's happening in that space?
Sure, Ian. I think that came from the destination plan, but it applies to the other sectors as well. So for those points, so in construction, we need the skilled work, the actual requirements of the infrastructure and construction. And it's really encouraging to see BCITO having a target and promotions around trying to get more women into construction. Some pretty aggressive targets there to grow from 2.6% of the work, I think 30% by 2040, and targets around apprenticeships. The household labour force survey that came out last week or the week before with record low unemployment really masks what's really happening. I think Boyd might have alluded to it. What's really happening in Auckland, and certainly for Māori and Pacifica. And the figures are wildly different between the HLFS and the MSD job seeker. So how do we get our large number of young people, migrants, Māori and Pacifica, into productive jobs, whether they're in construction or screen or tech? And so that really applies in the visitor economy. In terms of recalibrating industry capability and infrastructure, if you look at the visitor economy, public transport, we identified through the Destination Auckland AKL plan. Actually, 20% of the patronage is from visitors. But how does that infrastructure work for visitors? Because it's really planned around residents. So those sorts of things, matching those up. And I guess digital infrastructure is one that is really the significance of digital skills, digital equity, digital accessibility has been hugely heightened since COVID in March 2020, whether it's from schooling or being able to have events like this through to actually carrying on your business. So it's kind of meeting skills and infrastructure plays, but also the digital aspect. And what are we doing? Multiple programs depending on sectors, or working with partners such as government, with council, and industry. There's a lot to do.
Yeah, the just picking up on that point about the digital space. To me, the ultra-fast broadband network rolled out by Crown Infrastructure Partners it's really the unsung hero of the lockdown, right? It's enabled all of us to kind of that have desk jobs to kind of keep operating pretty much as if things were relatively normal.
Yeah.
So are there other infrastructure investments that we need to make in that tech space, particularly kind of in the regions? Is there still work to be done in that space, Purdy?
Yeah, I certainly in Canterbury, rural broadband is not fully, hasn't got full penetration, and when you've got a primary sector that's seeking to innovate and add value, to be able to innovate, on farm, on site, with good broadband is really important. So absolutely, but I think probably Pam's point about digital inclusion is the more salient one, so we can really get into those communities of interest, and also to achieve that inclusion, we've got to take non-traditional approaches too. And down here in Christchurch, we've partnered with local hapu so that they can, do skills pathway work on a whānau based approach, rather than, sort of a traditional MSD work broker. So I think it's being, having that objective of inclusion and sustainable prosperity, and then I guess, taking non-traditional innovative ways to try and address that. But really support what Pam was getting at before about the need for digital inclusion across those communities of interest. Just given what we know about the changing demographic and what the workforce is going to look like in 10, 20 years, it's absolutely critical.
And I'm very interested to know if anyone on the panel can talk about work that's been done with Māori business operators, post-COVID, to kind of develop new products, content capability. Anyone got any experience in that space?
I'll just jump in for a sec. There's no shortage of excellent Māori businesses producing products, content, and construction. What we need to do to accelerate or enable the growth of Māori businesses and improve their own productivity and try and bridge that gap between income is ensuring that they are connected to buyers through procurement. So supply diversity, I think, is absolutely key. And the quicker the government, has got its 5% procurement targets, but in Auckland we've got Amutai, which is Aotearoa's supply diversity organisation, which does a brilliant job of connecting those Māori and Pacifica businesses to buyers, from Wakakotahi to Tauranga City Council and ChristchurchNZ. So we're really supportive of the work that Amutai is doing, and then obviously through our business support program, enabling companies to get better, which a lot of our Māori businesses have been through many of the programs. But I can't stress the importance enough. Australia is far, far ahead of us, and that would make a huge difference to our Māori businesses and Māori people.
Yes, I 100% agree with that. A bit of the challenge is it's really hard to get visibility of Māori businesses, but we have a sister agency called Tuakarawa here, work out of this building, and kind of spawned out of us originally, and they've done a really good job getting local Māori businesses together. And then it's absolutely, as Pam says, how do you get the procurement side in there so that we have large local organisations supporting those local Māori businesses who are doing awesome things. And that is something that we have to get much better at. There's lots of latent capacity there to take it, but we're just not that well organised at the moment. So certainly something for the future, particularly given that kind of further to the skills and the likes of 45% of our workforce, people coming into our workforce will be Māori youth soon, and we need to find really good places for them to excel in the world.
Yep.
Great. Thank you, panel. How do we fund the recovery? There's lots of infrastructure that could be built around the country, but the government's borrowed an awful lot of money over the last few years to support the economy through COVID. The central government's taken on a lot of debt. Is that going to impact the ability of local and central government to invest in infrastructure to help us build our way out? Any ideas on both funding and financing of new infrastructure at the central and local government level? Pam, can I go to you?
Does ACC have any funds?
I think I was thinking the same thing.
Well, if I do have a couple of minutes to make a little advertorial for ACC, yes, we'd be delighted to invest in infrastructure in New Zealand. The biggest challenge, I think, is not the financing for infrastructure, it's the funding for infrastructure. Where does the money come from to pay back the financing, the money that's borrowed to build that infrastructure?
Yes, so that's something that we've been working on quite a lot here. So the challenge with Tauranga broadly is that we've grown at about double the rate of the New Zealand population over the last 7 or 8 years. And that really causes some squeezes when it starts to compound on itself. And New Zealand's not exactly ahead of the curve as far as infrastructure goes. So the challenge for us now is that politically it's difficult to get locals to pay for more of that growth because they don't like to do it. So it's then about adopting user pays type systems as well. Unfortunately, there's no really good ways to do that. So we're going to have to invent some ourselves. But I think if New Zealand wants to succeed in infrastructure, it needs to take some different approaches rather than flog the same old thing. I don't think it should be, from our point of view, exactly that. The financing's there, the capital's not the problem. It's getting an asset to be able to generate something so that people can invest in it.
Yeah, I agree. It would also that we could let international investors into the country as well, so they can see some of these projects. No, you don't want any of them? You want them all?
Don't want any competition, Pam.
You're right. Fair enough. Between you and NZ Super, maybe you could fund the recovery. That's right.
Yeah. I mean, from my perspective, when I look at my rates bill that I pay, that the average household would pay in Auckland, and I compare that to say, my cell phone bill or my power bill, I think I get a pretty good deal actually out of the rates that I pay for all of the services that the council provides. It does feel like that's a pretty good deal, and it does feel to me like there could be still some. If there are key infrastructure projects that need to be built, there's potentially some room for some targeted rates that back, that finance particular infrastructure projects.
Well, that's how other cities do it. I mean, you look at Los Angeles, that's how they built their whole metro system. I think they had an extra dollar on whatever it was for so many years. And then bingo, they end up with, a modern day metro system. So, other places do it. However, having just been through a process ourselves with accommodation, they do have to be well designed.
Yeah,
indeed.
Yeah. Look, and I think ACC was an investor in the Milldale project that Crown Infrastructure Partners organised, and Fulton Hogan building a lot of infrastructure up there, funded by the cash that we provided, and the via a then kind of paid off via a targeted rate, and that's gone incredibly well, I think. And we'd be keen to back other projects like that provide financing at a really competitive rate in order to build that infrastructure. So hopefully in the next year or so we see some more projects rolled out. I wanted to pivot and talk a little bit about carbon emissions. We've just had COP26. Global emissions from tourism rose 60% between 2005 and 2016, and according to the UN World Travel Organization, they're going to rise another 25% by 2030. So how do we reconcile the importance of the tourism industry in New Zealand with our need to decarbonise? And because obviously for each of you, tourism is a really important, international tourism is a really important part of our economy. Boyd,
absolutely. Yeah, absolutely. It's a somewhat of a conundrum. Obviously, the longer visitors stay, the lower their net carbon impact is. There's some, obviously, some sort of compulsory offset scheme. They're currently voluntary with air travel at the moment, could be useful. And I mean the ministers and the government's thrust towards regenerative tourism is a good kaupapa to support. So, yeah, well, I mean, we all need tourism and we all want tourism. And, there's some mechanisms in place to make it more sustainable and regenerative. So we've just got to, climb on board with those.
Tourism has to transform, and this is the time. We've been given a jolt, and COVID's bad. Well, climate change is, hugely more impactful. So we've been doing work. It's an important part of our destination plan, looking at how we can reduce emissions. We've got targets from the Auckland Climate Action Plan that we have to meet. And so one of the things that we're doing, we're setting up a climate innovation hub. We're focusing on four sectors. One of them is the visitor economy. Another one is actually the built environment, so including construction. Another one's food, and I can't remember the fourth one. But how do we come up with solutions that can be national solutions? So there's that. But I totally agree with Boyd. We really have to get in behind regenerative tourism, and it needs a really different approach. So it will be good to see how the work of the tourism industry transformation plan from government evolves over time. But certainly we're trying to front foot it and looking at how we create tourism for the future.
Yeah, look, for me, tourism is not attached to our economic development agency, right? So we view it like another sector, and it's about 5% of our economy. It's pretty, we're actually not too dependent on international tourism, but it doesn't appear to me to be like a sector that, like others, is trying very hard in this respect. And maybe that's me being a bit harsh, but there's been a reset. There's been tons of time to think about this. And for me, it's really about creating value, not volume, in tourism. And I hope that transformation plan can do that. As far as it affects this region, obviously cruise ships is the other one that most of our internationals come in on. They're a bit of a challenge as far as emissions go. So I'd love to see the industry take more proactive steps, because every other sector in an economy is doing this exact thing. So we need to see some change to maintain their social right to keep going.
Yeah.
I see real potential for a targeted rate that would enable decarbonisation of, say, particularly the transport sector and infrastructure associated with transport, whether it's ferries or buses or rail. Is that something that is being looked at the minute, that you're aware of by any of the councils?
Not targeted rate. I mean, there is talk of congestion charging, has been for a number of years. So with transport, either you build more concrete or you apply technology to solve problems. And from an emissions point of view, we need to try and implement more technology-based solutions, notwithstanding that we do need, road and infrastructure. So, I think that it's interesting to know if anything's happening in Christchurch and Tutt on that.
In terms of targeted transport rates, I don't believe so. obviously, maybe not obviously, our public transport network is not as well developed as Auckland, nor it is as well frequented. So, we're constantly, trying to get more people to use public transport. Our new motorways are new for, motor vehicles, but they have made, commuting in and out of town much more efficient. So, and, I know that there's been a fairly successful trial with electric buses on several routes down here too. So, there's small advancements being made, but breaking Christchurch people's habit to get out of their cars is, not an easy one, not an easy task. Although, the government subsidy of EVs has been really good, and you can certainly see the proliferation of that, and talking to dealers as well, that, if the incentives are there, consumers will act. So, sorry, nothing huge from a public perspective.
Look, from the Tauranga's perspective, congestion charging would be a massive change. Helps deal with your funding of infrastructure, as well as reduces your overall carbon footprint. The other one is, we obviously have the Port of Tauranga here. They do a really good job of getting large vessels in, which have a lower carbon footprint than the smaller ones that you otherwise might get. And then the value of railing things as well. The port, pretty much all of their expansion as far as containers goes has been via rail. And we'd want that to continue. That's actually a really good way you can reduce your carbon footprint through transport, at least.
That's right. I think it's about 2/3, isn't it, that you can reduce your carbon emissions by switching from road to rail. So anything that we can do to kind of increase the volumes that are going by rail must be a good thing. Can we switch for a minute and talk about the screen industry? Councils and council agencies around the country seem to be very keen on the screen industry. Is there a lot of competition going on between councils in the screen industry, or is there more collaboration going on?
So there's a huge global growth in demand for content, which I think is in part why you're seeing right across the country. Because, with the online streaming giants and just the increased ability of New Zealand as a country to provide a skilled workforce. We've always had the locations, we've got the incentives. The other part is infrastructure and workforce. That's why productions choose a region or a country to come to. And I think we've got a heritage of being a great place to produce content, whether it's TVCs in Central Otago to films in Christchurch, TV series in Auckland. I think Wellington have done 1 or 2 productions as well in their time. But, it's a boom and bust kind of sector though. You can see from, we geared up, we spent a lot of money attracting Amazon, and we had them here for a year with Lord of the Rings, and now they've gone. And it is a brutal industry. So productions, particularly working with these big companies, make decisions all the time. They're very mobile, globally mobile. So I would say that infrastructure has been holding us back across the country a bit. Certainly, we're making some improvements in Auckland. Boyd will talk about the great things they're doing in Christchurch. There's a really fantastic collegial regional film officers of New Zealand organisation. They all work together. I think the best thing that we can do, and this goes across everything that we do in New Zealand, we're so small. I know Nigel and I have talked about, working with Te Waka and Waikato around our investment attraction. We need to all work together. And so it's one thing that riles me up a bit when we say we're competing, because we can't afford to, and there's plenty of work out there. We need to work together.
Here.
Nigel, did you have a view on that?
All for collaboration, and exactly as Pam said, the screen industry is one that we're pretty modest on, but we'd love to have it as a bigger part. Just on that collaboration thing, I think we've worked quite closely with Te Waka lately around Upper North Island freight study, where I guess we're a bit frustrated at the 20-something reports the government's done and thought we'd get an industry view of it. But that's a good example of where you can just work with another region, and there's Auckland businesses involved as well. And all we're really trying to do is make it more efficient for New Zealand's sake, because we're all dependent on that. There's no point competing with each other. You may as well just figure out the best way and get on with it.
Yeah.
Agree. Boyd, and the screen industry in Canterbury. You've had the second round recently closed for the Canterbury Screen Grants. Has there been lots of applications in for that? And
There has been, yeah. So that's an example of what I'd describe as a grassroots initiative that we've taken with a modest budget, but it's already having profound results. But yeah, just we are too small to compete amongst ourselves. It's so wherever we can in our busy schedules, we try to collaborate. The intent is always there. But yeah, so the Screen Incentive Grant has been really useful. It's got interest from national and international productions of all type TV series, documentaries, feature films. And I'd expect other regions to follow suit, because it is, fairly common practice in, provinces and states around the world. We'll probably get a bit of a first mover advantage, I imagine. But, and look, you can really draw a really clear line between the economic and prosperity benefits of such an incentive, just like, seed funds are used to, attract major events, etc. So, I think it's just what we've done locally just adds, more attractiveness to all of New Zealand, not just our region.
And Pam, you said at the beginning of our session that you kind of come from a meeting building another studio. Is that right? And
Yeah.
Is there more infrastructure to be built in the screen industry in New Zealand?
Yeah, well, there's been a report done by NZT last year around infrastructure. What it studios, it's not build it and they will come, far from it. So there are a number of regions that say to me, we're thinking of building a studio in this town. It's like, wow, be careful. So utilisation of those concrete blocks is not 100%. It's not like a warehouse. So thank you, CIP. Yes, we are building a film studio, and that was in part to cater for Amazon's ongoing needs. And there are a lot of other private sector investors, locally and international, that are looking at New Zealand as a place to establish some studios. Yeah, but it's not the business that we want to be in. We intervened in 2017 and established Kiwi Film Studios, which set Auckland up to then have the Meg, Mulan, Avatar, and lately Amazon. But we did that because no private sector wants to invest in building a studio, and it'll be the same for Boyd. So, but it's not a natural intervention for. It's not an intervention that we should make mainstream for an EDA. Where possible, let the private sector run those things. So,
and in terms of that offshore investment, what are people saying to you at the minute about investment into New Zealand, given what's happened with COVID over the last couple of years? Have we still got people from offshore who are just as excited about coming and investing into New Zealand, or is that more muted now?
Oh, the guys will have an idea, but from my experience, there's a few things that I find worrying. Nigel and I have worked with a lot of investor migrants over the last number of years, people that have invested hundreds of millions of their own money into projects. multiple projects, adding real value. And I think their experience over the last 20 months or so is making a few of them just wonder whether they still want to be investing here. So investor migrant arena plays out with there'll be new policy on that coming out soon, I believe. We've had some big box retailers just putting things on hold, just because they're global giants and they're looking at all of their regions and what the impact of COVID is. We just can't wait to be able to have the borders open and welcome investors back in. And we're doing what we can to keep in touch, but there's nothing, you can't do a deal over Zoom, can you, when you're working with investors? Not being able to get people in for due diligence has been, the issue, because this slows down the whole pipeline process.
Boyd, did you have a view on that? Is that your similar experience for you?
Exactly, yeah, Pam's right. Look, for milling investors and, getting their feet on the ground is a critical part of the attraction process, and not being able to do that really limits our ability. Those investors that are already in the country, some who I know are sitting on their hands at the moment, just waiting and seeing. I mean, it's just a bit of uncertainty, and that's across, many sectors, not just the, inbound investment market.
Yeah, it's certainly been frustrating over the last little while. Here we're seeing a few of the kind of manufacturers that will invest here and then export. That's still happening, so that's all fine. There obviously haven't been too many new ones, but that's generally okay, that stuff. So they're probably small to medium-sized businesses. The investor migrant potential changes really worry us. We don't think they are in line with the feedback that we've given the government, certainly from the value that we see on the ground. And I guess more importantly, New Zealand has a massive opportunity here, and we've pretty much done, despite the best efforts of economic development agencies to keep investors on the hook, we've really not done what's right by them over the last little while, and basically said you're not welcome. So we'll have a bit of work to do to repair that, and I'm sure we can, but New Zealand should be embracing the stuff. These people can generally, they want to come here just to be part of the community and add value, and we should be encouraging that.
Thank you very much. Listen, just to sum up, I'm going to give you a difficult question, which is, if you had your magic wand to wave and you could change one thing about New Zealand, about what the government's doing, about what local government's doing, what would it be? And we've only got about 30 seconds each.
Perhaps I can crack on then. So here in Tauranga, we've seen our Tauranga City Council get disbanded last year and a commission put in. I think the way that local government is done is a real struggle. You end up having people in there with the skills that they shouldn't need to run big businesses. And all I could say is that commission does a very, very good job.
Interesting. Yeah. I'm funded by the council, and really welcome their support and to be aligned with their strategy. So slightly different setup, but I hear what you're saying, Nigel. But and Kānoa, the Regional Strategic Partnership Fund, is an example of how, I guess, what I'd describe as the economic cash cows of New Zealand. Auckland, Wellington and Christchurch are sometimes excluded from targeted economic development support. So I fully support the development of, I guess the non-metro regions. However, I'd describe them as cash cows, Auckland, Wellington and Christchurch, economic cash cows. So more inclusion and intentional targeting of economic development projects in the metros, I think, would really advance us.
Yeah, I agree with Boyd. So targeted. So while we can be cash cows because we have diversified economies, there are parts of our economy, I've alluded to South and West, that really need significant support And so being treated as a region, and we're a region of regions in the part of the world that I'm living in, being recognised, because it's all very good to aggregate the data, but it masks what's really happening. And then the other thing I'd say, given the situation we're in the very short term, having some certainty around next steps and opening up to the rest of New Zealand and the rest of the world.
Yeah.
Hey, thank you very much to my panel, Boyd Warren, Pam Ford, Nigel Tutt. It's been wonderful. Thank you for your time today, and thanks to everyone who's participated watching online. Ka kite.